So let's talk today about Heartbeam, okay? As you know, Heartbeam, ticker BEAT, is one of my positions. Here is Heartbeam. So, as you know, Heartbeam is a position of mine. My average price is at $1, and well, Heartbeam has just reported its first quarter 2026 results. So that's what we are going to cover today. That's what we are going to discuss. Before we begin, as always, nothing in this video is investment advice, okay? And with that said, let's get started. So the first thing I want to see here is how much cash the company has in relation to its liabilities, right? So let's first evaluate Heartbeam's solvency situation. So as we can see here, Heartbeam closed the first quarter with $2 million in cash and cash equivalents, right? Cash and cash equivalents. Their total current assets stands at $2.4 million. They have $1.4 in property and equipment here. But anyway, the company has about $2 million in cash and $3.2 million in total liabilities. So we don't actually have a good situation here because the company has more liabilities than assets. So that's the first thing. Okay? Now that wouldn't be a problem if this company were generating revenue, were delivering operating cash flow, right? If that was the case, that wouldn't be a problem. However, as you know, Heartbeam is actually a pre-revenue company. So they don't have any revenues yet. On the other hand, they already have expenses, as we can see here. Total operating expenses for the first quarter stood at $4.7 million, while in terms of operating cash flow, Heartbeam burned $3.6 million in the first quarter. And honestly, in my opinion, that's the most important number for us here. It's not the operating expenses we've just seen in the income statement. For me, the most important thing in terms of how the company's operations are going is this: net cash used in operating activities. So, if you think about it, Heartbeam is not in a good position, right? They don't have a strong cash position and the company is burning cash, right? The company is bleeding, in other words. However, we need to remember that Heartbeam in April, so that didn't happen in the first quarter. These numbers we are seeing here, right? They don't include this event here, which was Heartbeam announces closing of $10 million public offering of common stock. So yes, it's true that in the end of the first quarter, Heartbeam didn't have much cash left, while it was still burning a lot of cash, so very bad situation. So yes, that was indeed the case in the end of the first quarter. However, in April, the company announced the closing of $10 million. So Heartbeam has actually about $12 million in cash. So that's the bottom line. So in other words, things are not that bad in terms of liquidity. For example, as I read here, as the CFO, Timothy, said, this past month, we strengthened our financial position through an $11.5 million financing. We closed the underwritten public offering of common stock on April 16, total gross proceeds of $10 million before costs, and the underwriter as well exercised the over-allotment option of $1.5 million in common stock for further gross proceeds. So that's why they actually ended up raising $11.5 million. It was not just the public offering of common stock. Now moving on, the offering was led by our first commercial customer, Clear Cardio, alongside our executive leadership, board members, a number of existing investors, as well as several fundamental institutional investors. And that's actually pretty important because, as they explain here, this level of participation in the financing, including the fundamental institution participation, is a strong signal of conviction in the business model and our trajectory. I completely agree with that. I 100% agree with that. Now here's the part where they address their cash situation in the end of the first quarter. We ended March 31, 2026 with a cash balance of just over 2 million, as we've just seen. So when you include the net proceeds from the recent offering and over-allotment, we would have a pro forma cash balance of approximately 12.4 million. So that was the first thing I wanted to check regarding Heartbeam, regarding Heartbeam's Q1 numbers, right? How much cash the company has. As we've seen, they had only 2 million in the end of the first quarter. However, today they have much more than that, around 12.5 million. And with that, well, we could say that the company still has another year of breathing room before needing to raise more capital. Now, I hope that doesn't happen. However, I think it's more likely that this will end up being the case because it will still take some time for Heartbeam starts generating cash, right? Let's remember that Heartbeam is actually a pre-revenue company. So, yeah, I think Heartbeam will likely dilute more shareholders. And with that said, well, if you don't like dilution, you probably shouldn't be involved with the stock, okay? Investors who want to go long here need to accept that we could see more dilution. So that was the first key point regarding their Q1 numbers. And now I want to go through the company's recent progress. I want to read about how they're advancing. But you see, in my view, a lot of progress was made in the first quarter. For example, Heartbeam signed first commercial partners in leading concierge practices, Clear Cardio and Atelier Health. So, very important step forward, if you ask me, right? The company finally signed its first clients. The company is finally entering its commercial phase. Moving on, established flagship commercial sites across New York, Dallas, South Florida, and Southern California. Strategic collaboration with Mount Sinai, which is one of the most respected hospitals, right? Healthcare institutions, medical institutions in the US. So as I was saying, strategic collaboration with Mount Sinai to accelerate next generation AI ECG algorithms, starting with heart attack detection. So another very important piece of news. I mean, imagine where this stock could go if Heartbeam got the FDA's approval for heart attack detection. That would be massive. Anyway, moving on. Strengthened balance sheet with 11.5 million public offering, including full exercise of over-allotment option, initiated heart attack detection pilot study, a key step towards future FDA indication expansion. Heartbeam also initiated the pilot study of first on-demand 12-lead ECG path to detect ischemia outside the clinic. So the company is pursuing other indications. That's very good because that will expand a lot their market opportunities. Their total addressable market. So yeah, in my opinion at least, we saw a lot of progress in the first quarter. So, to close this video, did I like the results? Well, yes, I liked what took place, what happened in the first quarter. I think huge achievements were made in the first quarter of this year. The company has cash to continue its operations, that's great, and the company also seems to be succeeding commercially, right? While pursuing new FDA indications. So, that's it. That was my impression of Heartbeam's Q1 numbers. Okay? And with that said, that's it for today, and see you next time.